Hi Forex traders, you're welcome back. This is Carrie's Trading Institute and this is the weekly commentary for the dollar and GBP USD. However, we're going to go through this week's price action. We're going to study what price action has created from Sunday market open to yesterday Friday the market close. We're going to see how price has responded to our previous week's analysis. Week by week we see how price keeps doing the same thing we keep saying it's going to do in the marketplace. All right, these things are a function of an adequate level of knowledge and mastery that comes over time when you have been in the marketplace and you've acquired the right level of education, the right level of knowledge. This is the same for almost all my students who have gone ahead to submit under mentorship, and they are getting to see these things happen to them one after the other. All right, so last week we had a projection that the dollar was going to react of this buy side imbalance, sell side inefficiency, and we needed to see the dollar trade into the previous week's internal range liquidity that was created on the daily time frame. And we were paying attention to the bearish order block, the mitigation block. This is a mitigation block right here. All right, price had created a low here, a lower high, then we had a shift of market structure. So this is a mitigation block, and we were anticipating that the dollar was going to trade into these levels. And I also mentioned specifically that I would be more interested to see this week's price action create a fair value gap. All right, and as you can see, price has created that fair value gap. We have the low here and the high of the third candle. That's a sell side imbalance. All right, that price is currently mitigating that inefficiency. All right, so let's just go to the daily time frame and see what price action has done. So on the daily time frame, you see how price has been reacting. We already outlined that we needed to see price mitigated at least 50% of this entire range that was created, and price has been trading into the equilibrium of that range, and we are hoping that price is going to go above equilibrium and trade into premium levels so that we short at premium and we buy discount market. So as the dollar is approaching the premium, we are also anticipating that foreign currencies are going to start trading into a discount region. Okay, so on the 4 hour and 1 hour, we will search for specific entry signature or patterns. We like to see price create a clear external range liquidity as we start to short from internal range. All right, so this was the Monday open. Price swept above the high of the previous weekly close. That's the previous weekly high. That's Friday. Price swept liquidity above, and then price traded back into this bullish order block of the 1 hour time frame. Okay, this is refined to a 15-minute, but it's a bullish order block from the 1 hour. The last sell candle here traded through by these two consecutive buy candles, forming a bullish order block. Price traded into that level, and look at what we see on the dollar. Price created a clear external range liquidity that even gave us a shift of market structure. This was a low. Price formed another high here, low high. Price formed a higher low here. The low could not take out the previous low, and then we had a shift of market structure right above here. Then that's our external range liquidity created. Price traded back into that internal range bullish order block right here. The bullish order block, price traded into it, and we started to see the dollar forming higher highs, higher lows, higher highs, higher lows. All right, so that has been the price action for the dollar. Okay, and the opposite is also what we see on GBP USD. GBP USD traded into a discount level. So at this point that the dollar had created this level, gave us a clear external range. We would search for a smart money divergence between Euro USD and the dollar. Okay, so we're going to see what Euro USD did at that level. Okay, look at what the Euro USD created. The Euro USD on Monday also swept the lows. Then Tuesday, Euro USD formed a higher high. You can see that is smart money divergence. Euro USD was forming a higher high. The dollar did not form a lower low. GBP USD as well did not form a higher high. So that was a clear smart money divergence. You can see that GBPUSD did not form a higher high, GBPUSD formed a lower high. So what we had was a smart money divergence identified on that Tuesday. So Tuesday formed the high of the week on GBPUSD. Okay, and immediately after it had formed the high of the week, look at what happened. Price traded above Monday's high, gave us a clear external range liquidity to the downside, which was this. All right, then price traded back into internal range fair value gap. I know you'd be saying there's no fair value, there's an implied fair value gap right here. 50% of the candle wick here, the first candle. Remember, fair value gaps are a 3-candle price action. So the first candle, 50% of the wick, and 50% of the wick of the third candle, that is an implied fair value. Let's look at how price traded into that IFVG and started to tank. GBPUSD started to trade into those levels we outlined on the daily and the 4-hour. If you haven't watched the previous week's commentary, please kindly do so that you get to understand the things I'm mentioning. All right, so price gave us that expansion to the downside, forming lower low, lower highs, lower lows, lower highs. That has been price action on the GBPUSD. Okay, so going into the new week, let's get to see what we're anticipating on the dollar and possible reaction on foreign currency. It's important to check Forex Factory calendar so that you get to know what's happening on the fundamental basis. If there is a possibility of a high or medium impact news event unfolding during the week, you need to check that on the economic calendar, forexfactory.com. So on Monday, just study and outline all the high and medium impact news events. The red boxes indicate high impact news events unfolding in the marketplace. So you take note of the type of event, the time the event is unfolding, and the day the event is also unfolding. Then on Tuesday, study between Monday and Friday. Take note of all the time, the type of event, and the day the event is unfolding, so that you are not taken by surprise when you start to see speed of price delivery. It possibly could be induced by that high or medium impact news event. So we just go to the dollar, and on the dollar we want to analyze institutional order flow, especially from the higher time frame, monthly, weekly, and daily. We're interested in knowing the directional bias from these time frames because the higher time frames are the main drivers of liquidity. Okay, so on the higher time frame, you can see that price just reacted off that buy side imbalance, sell side inefficiency, and it's heading into internal range mitigation block right here, PD arrays. All right, so we are paying attention to the mitigation block right here. First is the mitigation block. Then after the mitigation block, you can see that there is also a bearish order block right there. So the mitigation block, you have the bearish order block, the last buy candle, the candle with the largest body that was traded through by these two consecutive sell candles, closing below the low of the buy candle. That is a bearish order block. We would like to see price trading to the mitigation block at least before it starts to tank to the downside. Also, we are paying attention to the fair value gap created right here. We would like to see price trade into at least 50% of the fair value gap is called consequent encroachment. Then we go to the daily time frame. On the daily time frame, look what price is going to do. So on the daily time frame, we are looking to see the dollar trade into this is that mitigation block level. All right, and there is a possible fair value gap right here in a deep premium that the market may want to reach out for. And if this is going to happen, then we'd like to see price open and form the low of the week, possibly around this fair value gap on Monday or Tuesday. We'd like to see the dollar open and trade into this fair value, this bullish order block. This is a large candle bullish order block, so we are paying attention to 50% of that bullish order block is called the bullish order block mean threshold. So we'd like to see the dollar trade into this level or this level and trade right up into that premium level for the coming week. That will be my anticipation on the dollar. So on the 1 hour time frame, this is what I'm anticipating to see. I would like to see that guy open and trade back into this inefficiency that was created, all of this liquidity void that was left unattended to. We'd like to see the dollar trade back into this level. You can see that bullish order block right there. Okay, so once that happens, that will be that's where I'm anticipating that the dollar may form the low of the week and then start to trade up into deep premium throughout the week. Okay guys, so this is my expectation for the dollar, and I'll be dropping more videos on my expectation on GBP USD and Euro USD. I guess by tomorrow you should anticipate that video. Guys, if you like the video, I'd like you to click the like button, subscribe to this channel, and until next time, I wish you good luck, good trading, stay safe.